7, 6.
I think we're live. Welcome everybody to OMFIF's first Latin America and Caribbean outing for 2023. It's fair to say that from the point of view of the international capital markets, at least, the year has started in a way that wasn't really expected as 2022 drew to a close. The degree of optimism is there. There's also pessimism in some aspects of human endeavor, but optimism is certainly there in the markets, and markets have had a very good start to the year, particularly emerging markets credits, especially in Central Eastern Europe. Obviously, we're concerned here with the other side of the world. By my reckoning, there have been 5 major bond issues out of LAC, as we should call the region now, this year. Two sovereigns, 2 multilateral development banks, both of whom I'm delighted to say are represented here, and one, I guess, state-owned enterprise in the form of Ecopetrol. Colombia and indeed Republic of Colombia, Ecopetrol, and Mexico, of course, were the other 3 issuers this year. So we've gathered together a diverse panel of people, diverse group of issuers, not least, to discuss what we think the outlook is for 2023 and perhaps beyond. So we're delighted to have them all here. Just very quickly, I'm sure you all know that OMFIF is the official monetary and financial institutions forum that began life as a membership think tank for central bankers, but now has grown to include all sides of the capital equation, as I like to call it, in the public sector bond markets. And we've got a separate pillar for that now in the form of the SDI. S does a lot of work in that initialism. It's Sovereign, Supranational and Agency Debt Institute. So, as I say, all sides of the market are here: asset managers, asset owners, bankers, raters, issuers, and so on. And we've got several of those categories represented. We haven't got a ratings agency here, actually, but I think we've got 1 or 2 in the audience. So if they feel moved to give voice, please, may they do that. Anybody who wants to ask a question can do so, of course. It will be flagged up on my separate screen here, so please feel free to do that. So let me tell you who we've got. We have from Brazil, from the Brazilian Treasury, we have Otávio Medeiros, who's the Undersecretary of Public Debt in the National Treasury Secretariat. We have, standing in for Herman Camil from the Uruguayan DMO, Debt Management Office, we have Victorio Busquio, who's the lead advisor at the Uruguayan DMO. Obviously, we know they did a rather spectacular issue last year, which we'll be talking about some more in due course. We have Diane Black. Delighted to see Diane. Diane, we've known each other for about 20 years, I should think, which is terrifying when you think of it. But Diane represents the Ministry of Finance of Jamaica. So we'll be hearing from her what's going on in Jamaica and the really quite positive time they're having now compared to some hard years recently, economically and financially. Gabriel Felpeto, another old friend, joins us from, are you in Bogota, Gabriel? You are, I think. Just put your thumb up.
Yes,
You're
indeed. Here.
You're in Bogota. Gabriel's the CFO of CAF, the Development Bank of Latin America, which of course is still camping out in Bogota and Lima. Its original home being somewhat less hospitable than at one time it was. And last but by no means least, we have another multilateral development bank, this time sitting in Tegucigalpa, Honduras, CABE, or BCE, the Central American Bank for Economic Integration, represented by Humberto Rodriguez, who's in charge of debt capital markets and funding. And both Gabriel and Humberto, as I've said, have issued this year, and in each case, the largest ever bonds they've issued. So we'll talk some more about that later on. From the buy side, we've got Alfredo Modeschi, I beg his pardon, who's the head of Latin American fixed income at Santander Asset Management. We have Sean Newman, who's an emerging market senior portfolio manager, lots of experience at Sagicor in Jamaica, before that at Invesco, and too many other asset management firms to mention. Alper Gusser joins us as head of emerging market sovereign bonds at Pictet Asset Management. And I notice, Alper, you have a particular responsibility for local currency investment. And local currency is certainly something we should be talking about during the course of our conversation. And last but by no means least, delighted to have them here from Societe Generale, who sponsored this event, and there's two of their people taking part, which is terrific. We've got Richard Sanders, who's the head of impact structuring for the Americas. They're both based in New York. Richard's really in charge of the structuring effort at SocGen for sustainability in the region, sustainability issuance in the region. And indeed, SocGen was the advisor, one of the advisors to Chile, who of course did the first ever sustainability-linked bond by a sovereign last year. And his colleague Peter Borghese is the head of debt capital markets, again joining us from New York. So to that point about last year having been a somewhat thin year for issuance, I mean, really notably so, half of 2021 volumes were issued from the region last year, and that's well under the 10-year average. So I'm going to ask Peter first, because he looks at the whole region and the whole market. Was that any evidence of some kind of structural change in the markets, structural change in volumes? Was it a point about COVID having been washed out of the system and being paid for? What do you think? Is it secular or cyclical?
Sure. Thanks for the question, Chris. I'll speak in broader terms here and open up to my colleagues on the panel to maybe speak to some of the more nuanced aspects of this question. But I think in answering the question about issuance for 2022, it's important to put that in the context of what we saw in 2020 and 2021. So 2020 could very broadly be categorized as a year where issuers across the Latin American region and many other regions across the world looked to plug sort of an emergency funding gap. There was a mentality of responding immediately to COVID. And in that response, the mentality was go into the market and build up a liquidity buffer and make sure that you first had the money you needed to respond. 2021 then I think was a particularly interesting year because you had a balance between countries beginning to think longer term, continuing to respond to COVID, but I think also changing some of their thinking, some of their priorities, and rethinking how spending should be set moving forward as people across countries thought about things in a different way, as many of us did throughout the course of COVID. And then I think that also was overlaid with a year in 2021 where funding conditions were historically attractive. We saw benchmark rates across the globe at near all-time lows, credit spreads at very, very tight levels, and an investor community that was willing to sponsor transactions across the rating spectrum, across tenors for nearly all issuers, which naturally lended to a large amount of opportunistic funding as well. That all sort of carried into 2022. And Chris, as you very properly pointed out, we saw a significant drop in funding last year. But I think a large portion of that was maybe a function of the incredible funding and issuance we saw in record 2021, as many companies pre-funded, in combination with a market in 2022 where conditions were significantly more volatile and funding conditions or funding rates increased quite materially throughout the course of the year. I think where that brought us was a point where, for the first time, the guarantee of getting into the market, issuing across tenors, issuing at historically low rates was not a guarantee. And I think as a function, you saw issuers rethink their funding strategies, really think about timing at the same time that a number of new structures were introduced to the market via the Chile Sustainability Linked Bond, as well as the Uruguay Sustainability Linked Bond.
Sure.
As we move into 2023, as we move into 2023, Chris, I think the interesting thing we'll be thinking now about a market which has certainly improved. We're seeing strong subscription ratios across the market from investors, but we're also seeing sort of those elevated funding costs carry into 2023. And I think that will have important implications for issuers as they think about how to set up funding throughout the course of this year and moving forward.
Sure. Thanks, Peter. Gabrielle, let me turn to you. I mean, do you think that you have issued this year? We won't talk in detail about that at the moment. We'll come back to it. But do you think there's been a sense of this kind of renewed activity across the markets in the first 6 or 7 weeks has stemmed from the fact that people think there's clarity on interest rates and inflation. Has that brought people into the market this year who were hesitant last year? And I've got a follow-up question for you on that, but that one first.
No, thank you, Chris. No, certainly that has a lot to do with the reactivation of the markets. We come from a year, as Peter described, which was a very difficult one for several reasons: higher interest rates, new conflicts around the world, inflation, and everything came suddenly, and volatility was there. So it was very difficult to find windows of opportunity for issues. As many of the issuers here in the panel know very well, we had to wait for days, even weeks, for issuing a new bond, which not necessarily was the case in the previous years, even during the years of the pandemic. So, but this year, after, rates somewhat stabilized, as you mentioned, Chris, there was more clarity for investors in general, for asset managers in general, portfolio managers, which certainly suffered also last year, having a lot of losses because of the situations I mentioned before. But the year started with a different tone, which is certainly has translated in many issues, such as ourselves, but some others accessing the market with, I would say, more better conditions than in the past. In general, what we see is that the market is gradually returning to normal. I wouldn't say normal because, as you certainly know, in the recent days, there is some kind of volatility given the recent news in CPI and the strong numbers in the US economy, and certainly more expectations of further rate increases. But certainly is more stable than past year. And you've seen in the market, in general, issuers, but in the EM space, with certainly the investment grade rated, and also some double B issuers accessing the markets with no problems, but at a higher cost, for sure. The cost, of course, is the base rate. The treasury curve is much higher than it was last year, but also because new issue premiums. What we're seeing is also that new issue premiums are still large and even increasing in some cases. So because of the investors certainly are willing to protect their investments with and the volatility, asking for higher new issue concessions. And this is happening not only, and certainly I would like to hear from issuers, particularly the ones in the region, sovereigns. This is not only the case in hard currencies, in dollars, euros, or others, but also in local currencies. So that is happening all over the place. But I guess that if you need to raise funds, you have to bear a higher cost. You can avoid that. That's certainly something that is there, and you have to.
Well, speaking of that, and obviously I'm not going to ask you to speak on their behalf, but one important regional issuer is an important shareholder in CAF, which is the Republic of Colombia. Yeah. And they, of course, did come this year, but one would suspect that they, having normally been a fairly early issuer in the global capital markets, they might regret the fact that they waited until the very end of last year and really had to pay up. We would love to have had the Colombian DMO here, not for lack of asking them, but just a comment on that, if you would. They came to the market this year, great success. But, last year, they probably waited a bit long.
Yeah, well, it's difficult to say. My advice, that's what we do. You have to access the market when it's there. You never know what's going to happen in the next even weeks. So I think they did well. Last year was very difficult. So they saw the window earlier this year. So they took the opportunity, and that's great news for them, of course.
Yeah, okay. No, I wasn't really expecting terribly detailed comments on you from that. But Diane, Gabrielle's just mentioned a couple of things which have obviously been headlines over the last day or two. Unexpectedly high retail sales numbers out of the US, and perhaps unexpectedly jobs numbers out of the US, which has led a number of people who only a few days ago were saying the Fed rates might have peaked and might pivot in the foreseeable future, perhaps to step back a little bit from that opinion. What's your view? I mean, comment on the general question we're discussing, the volumes in markets, if you wish, but I'd like to know what your view of rates is at the moment, and how much does that cost Jamaica? I mean, obviously it costs Jamaica, but how are you facing that?
Well, thank you very much, Chris, and good morning all, and thanks to OMFIF for giving me the opportunity to share with you this morning. Well, in terms of the rate environment, we ourselves are being affected in terms of the high interest rates. We have probably about 30% to 40% of our debt is in variable rate. So both international and local. On the international side, the debt has been linked to SOFR, and SOFR has gone way up. So that has cost us a pretty penny in terms of debt service. On the local side as well, the central bank has been tightening. They have steps back as at December, but they have been tightening, and that has sent up our interest costs on the local side. The outlook for rates, we do expect the central bank to ease back and probably start lowering, easing later on in the fiscal year. I do note, as you said, that even this morning I was watching CNBC and they were saying that they expect the Fed to hike up to probably going up to about 6% for the terminal rate. So if that happens, then we would expect that there will be increased debt service on our current debt stock, especially for those tied to SOFR. But happily for us, for this year, we do not intend to borrow from the international capital markets. So we are not worried too much about rising rates in the ICM for our new debt. We do intend to access the RSF from the IMF, which, as you know, is at concessional terms and low interest rates. So from the debt service side, yes, we are concerned about the rising rates and the impact that it has been having on our debt stock, on our debt service cost. Although with the decrease in debt stock, we do expect our interest costs to go down in the near future. So we're watching keenly the Fed and what they'll be doing in terms of the monetary policy going forward.
Thanks, Diane. Octavio, were you surprised to see the recent prints of US statistics that have given rise to the feeling that, as Diana said, terminal rate might be 6? Had you factored that in, or was it not a surprise to you at all?
No, it's a bit of surprise because some weeks ago, have seen a different perception, and this, of course, affects the demand for the traditional bonds. Not the case of Brazil, because our debt is fully financed domestically, but for some countries, while the market did not see the end of the process, they will reduce the demand for this kind of bond.
Octavio, forgive me, but your sound is terribly muffled. I don't know if it is for everybody.
Sorry. I hope it can be better now.
It's like you're sort of talking from inside a pillow or something.
Okay. I hope it can enhance a little.
Oh, that's a little better. That's a little better. Okay. I beg your pardon, but obviously it's important for everybody to hear what you're saying. Okay, great.
I'll try to put closer to my mouth. Okay. No, just saying that for the ones that need more, the international market it's very complicated, because the market usually reduces demand when the central bank is in a process of increasing interest rates. So this happened in any country. It happened in Brazil some in 2022, for example, we issued less bonds than expected, exactly because our central bank was increasing interest rates. So during the process, it's quite complicated to buy bonds, in particular fixed rate ones.
Okay, thank you. In this conversation, we're sort of focusing mainly on the issuers for the first session, for the first part of the session, but switching to the investors more towards the end. But just as we've reached this point, I wonder if any of the asset managers present, before we hear from our other two issuers, would like to hazard a guess as to what the Fed's terminal rate is. I know this is a sort of parlor game that people play at financial and capital markets conferences all the year round and always have done. And it's, maybe not a terribly real thing, but I don't know, Alper, Sean, Alfredo, anybody want to stick his hand up and say what he thinks is happening next?
Sure. What's happening next?
Well, what's happened just happened, and what's going to happen next?
I can say a few words about what has been going on, because Peter did a very good introduction in terms of what happened in 2020 and 2021. Now, we as investors need to look at not only the technicals of the market in terms of demand, but also the fundamentals of the market. And this process that Peter mentioned, of course, had a lot of implication in terms of fundamentals of the market, in terms of levels of indebtedness, in terms of fiscal dynamics, sustainability of debt levels. So all these issues came into play. And then something new that we didn't look for a long time. It's not new. I mean, things in the financial markets are never new. They just come and go. So they came back. I mean, things like the interest expense. Nobody looked at the interest expense when the interest expense, when in Brazil the rates were 2.5%, nobody looked at the interest expense. As you didn't look at a company about EBITDA over interest expense. And now everybody's looking into EBITDA over interest expense because interest rates are at 12, 13%. So it really had a lot of difference in what we saw. But regarding fundamentals, it's not all negative. We have seen a lot of improvements as well. So we saw improvements from 2020 to 2023, improvements on the fiscal. I have to say that inflation is the government little helper in the dark, because at the end of the day, it helps raise fiscal revenues. So it was together with some good levels of commodity prices, it helped the issues. I mean, it helped the region to balance the increased budgets. So debt levels came down in many of Latin American countries, and this is good news for us. On the negative, borrowing cost, it has already been mentioned, it went up significantly. Interest expense now is important, and it also feeds into the fiscal. This is a negative dynamic that has to be taken into account. If you look at Brazil, for instance, Brazil doesn't have a significant amount of debt in US dollars, in foreign currency. It's really, really low, but it has a significant amount of debt in domestic currency, and domestic rates are very high. So it's much more important what's going on in the monetary policy internally than what's going on in the Fed. Of course, I mean, you can't do one without the other, but it's a lot more meaningful. And last but not least, I think in the last, well, in the previous cycle, we have seen a huge improvement in government ratings, in government fiscal performances. And as a result, a lot of companies could come to the market. First, I mean, like government-owned companies, and then full private sectors. And as a result, we really increased the diversity of the credit markets internationally, which was, I think, a very good thing. And now we are somehow facing a bit of a backlash on this development. So we are starting to see a bit of what we call the crowding out effects. Governments, because they borrowed a lot more in 2020, now they will occupy a bigger part of the pie in a market that has naturally shrunk. I mean, yesterday, I mean, you were talking about how issuance went down significantly last year. Well, the counterpart of that is that the emerging market bond funds got 110 billion of outflows last year, and this was unprecedented. I mean, it was never so big, so we could never show that amount of outflows. But in my life, and I have a couple of years in the market, I never seen this amount of outflows. So, so that's the other side of the coin that we have to understand. And two positive things, just to leave the optimistic part of the half full glass. First, performance was better than the US Treasury market, so spreads really contributed to positive performance. So even if we have, of course, negative absolute performance, the region mainly outperformed, the indices outperformed the US Treasury. That's good news. And second, the currencies in a year that was so challenging because the US dollar was very strong. Still, I would say most of Latin American currency, the exception was only the Colombian peso. I mean, they all performed positively against the US dollar. So that's two, I would say, good news for the market and the region, and I leave it there.
Thank you very much, Alfredo. Victoria, do you agree with your countryman? Alfredo is Uruguayo as well. That inflation is the government's little helper. So a comment from you on inflation and rates, and then I'm going to stick with you to ask my other macro question, which you see on the list, and then I'm going to switch it to Humberto, and then we'll move around a bit more. So first of all, inflation and rates.
Okay, thank you, and thank you to all. We are seeing, in the case of Europe in particular, we are seeing some deceleration in the inflation, and this was reflecting our nominal fixed rate. Indeed, we have in this year recently has executed an important local currency transaction in the local market, where we have the opportunity to issue a nominal rate fixed bond that was issuing our regular actions and was reopened in this important deal. And the transaction was also complemented with another instrument that were linked to CPI and linked to the nominal wage, and was with a scale of a global transaction. We are very focused, and for us it's very important to reduce the exchange rate risk in our portfolio. We have a target to meet 50% of our local debt at the end of the 2024 to be denominated 50% in local currency. So we have a very big challenge, and we are continuing to focus on the issuance in local currency. So for us, it's key to have control the inflation and to continue developing these markets, both issue in the local and in the global markets.
Thanks, Victoria. Uruguay is a relatively small economy, obviously, compared to some others. But I want to introduce this topic, which you've all seen on my list of topics, of reopening China. I'm a little bit surprised that hasn't been talked about more in terms of a demand boost from China across everything you could think of, commodities and not by no means least. I'm slightly surprised I haven't seen that more talked about as a driver for growth in Latin America, given how important China has been as an export partner and trading partner for the region. Victoria, do you in Uruguay, do you pay attention to what's happening in China? Do you monitor those demand numbers closely? Is it an important thing for you?
Yes, we monitor what happened in China. Indeed, the growth in 2022 was mainly displayed by a boost in export. Our main commercial partner is China. We are monitoring the situation. We are not focused as our baseline is to diversify risk. We have been putting a focus on China, but we will be in the last years very active in terms of diversify our destination of export and also destination of product. For this year, we see some important domestic drivers that will boost the economic growth. That will be the rebounding tourism, and also the production of the second pulp mill that will be in production this year.
Okay, good. Thank you. Umberto, at CABE, as I know very, very well, China is a slightly different subject than it is in many conversations, because of course Taiwan is your biggest single country shareholder. Nonetheless, several of the countries in Central America are now no longer recognize the Republic and recognize the People's Republic of China. Leaving all of that to one side anyway, China is an incredibly important partner for Central America, for your countries, in terms of trade. Is the reopening of China post-COVID, this sort of sudden policy shift that we saw towards the end of last year, is that something that's important for Central America and therefore important for CABE?
Thank you, Chris. And I think that is a very good question, and a question we get a lot from investors, given our links, as you know, to Taiwan. First of all, I mean, Central America is a very resilient region of the world in terms of economic activity. Of course, our main trading partner is the US, but an important factor is that the second most important commercial partner for the region are the countries themselves. So that certainly provides cushion for external shocks. And then, of course, we have the European Union. So China is important, but not as vital as it is to other regions in the world, as we are more linked to the performance of the US economy. Hence, you know, we're looking closely at the Fed, and as Gabriel mentioned, you know, at CABE, we are counter-cyclical. So in times of stress, we have to be there and take advantage swiftly of the funding opportunities that arise. Yeah. And of course, Taiwan is a vital partner for the bank. 40% of our funding last year came from Taiwanese investors. So we expect that trend to continue in the near future.
Yeah, as you say, when everybody else everybody else can't find funding, you need to find funding, because that's when you step in. But just to stick with you for a moment, you mentioned the US, of course, that's incredibly important for everybody. But just pick up that, if you like, rather mundane point about this turnaround in expectations of the Fed's next move. Nobody this week is talking about a pivot. Further tightening is on the cards, isn't it?
Sure. Inflation is proving to be sticky, as you know, was expected. This just puts more relevance to our recent market intervention, right? Being ready to pick the right window and trying to procure the most funds we could. I mean, as MDBs, we have to be liquid and ready to support the countries whenever stress comes around, you know, and that is around the corner usually. So especially in our side of the world. So I think that, you know, rates are going to keep coming up, and it's going to be a challenge for sustainability in terms of the countries and their interest expense, as has been mentioned. So, you know, our role is to diversify our funding sources and keep our cost of funds at a lower level, so we can translate this into concessional funding conditions for our borrowing member countries.
Okay, thank you. I'm going to switch now, unless anybody has a burning desire to talk about renewed Chinese demand. I'm going to switch now to the conversation that's already been mentioned by a couple of you, particularly Ottavio, and he's going to talk about this in a moment, which is local currency or local domestic bond market funding. But Diane, as you've already said, at the moment, the Ministry of Finance, in terms of its capital raising, well, obviously it taxes people, but in terms of its issuance of securities, relies entirely on the local market. Do you have much international participation in that in Jamaica?
No, currently in terms of our local market, I would say probably about 1% international participation. But I should say, Chris, that over the medium term, we have an objective of issuing local currency in the international capital markets. We started working on that, but COVID played a number on us and we stopped. So we have picked that up. So we have that as a medium-term objective to issue local currency in the ICM. We have canvassed some of our international investors already, and there is interest there. So we have started to work again on that initiative. But currently,
that's very interesting. I mean, would people who are already FDI players in Jamaica be likely buyers of a Jamaican dollar bond?
Yes, I think so. I think so. Yes, yes. So we do expect a diverse investor base in terms of the investment in the local currency, and even some of our investors in our global bonds too have expressed interest, or international investors in the global bonds. So we do expect some support for that when we do launch.
Okay, interesting, very interesting. Otavio, local currency, 95% of your debt is denominated in reais. I mean, you do that through choice. Obviously, it's not that you have no other option. But is there any sense in which you have potentially a greater refinancing risk for local currency bonds, which obviously almost by definition are shorter term on the whole than any international bonds? Is that something you look at? Is there a risk implicit in that?
Yeah. When we started to change dramatically the debt composition from external debt to domestic one, it was late 2000. We understood that we need to create a buffer, a cash position to deal with the refinancing risk that certainly would appear. I mean, external debt, you issue 10, 30-year bonds, and the domestic market, you issue 2, 3, 4, 5. We also issue a 40 years bond, and inflation-linked bond. But the great majority is concentrated from 2 to 10 years. So for sure, our debt reduced the maturity. So 20% of the debt outstanding 12 months. The average life of our debt, average maturity is 4 years. So it's very concentrated. But on the other hand, we put our cash buffer in central bank, and the remuneration is quite similar to the one that we have in the market with our bonds. So there is no carry cost for our cash position. And we manage that very well, keeping always at least 3 months ahead in terms of cash position to deal with some risks. And we saw a lot of problems during this long period. I mean, 2008, Lehman Brothers, 2015, impeachment of the president, 2020, pandemic, and 3 months was enough to manage this concentration of debt. However, there are some benefits on that. I mean, for example, our deep domestic market, we need to raise close to 8% of our GDP during the pandemic. We're talking about $100 billion that we raised additional to the amount that was in our pipeline. And it was impossible to do that in the international market. $100 billion, imagine some months. And we did that in the domestic market. Of course, we shortened the maturity of the debt and then issued the bonds, increased the amount of debt outstanding 12 months to 27%, but raised a huge amount of money to pay the costs of the pandemic, the programs that the government launched. Also, we have a kind of shield. Domestic debt in our currencies shielding against volatility in exchange rate. For example, 2008, as I mentioned, 2015, impeachment, 2020, all the time when exchange rate increased a lot, our debt was quite stable. So there is no external risk being transferred to the domestic, to the debt management. This is very important for us. We see sometimes some countries suffering a lot when we see this overshooting exchange rate. And also we create this yield curve for Brazilian companies that not necessarily they are ALM, suggest them to issue bonds abroad. So we have a very well-defined yield curve in nominal terms and inflation-linked bonds that help a lot the Brazilian companies. So there are some good benefits, and that has proven during the last, let's say, 20 years, that show that's better to have. This does not mean that the external debt is not good and we do not continue in the external market. We really expect to return this year to the external market, but it's just very good window that appear, then we go there, issue bonds and offer a good liquidity point and well-defined price for Brazilian companies to issue abroad if they need.
Well, thank you, Otávio. We'll come back to why you do occasionally issue hard currency bonds, or foreign currency bonds. I hate the expression hard currency, foreign currency bonds, and what your next one might be. We'll come back to that before the end of the conversation. Gabriel, let me turn to you. I mean, not every country is Brazil and has the luxury, if you like, of very large, sophisticated financial markets, a huge essentially domestically controlled banking sector, asset management sector, well developed, and savings, and so on and so on and so on. Some of the countries in Latin America are dramatically smaller and have far less developed local capital markets. But when you talk to your member countries, I know this is not so much your side of CAF, but nonetheless, I'm sure you get involved. When you talk to your member countries about how they issue bonds, how they raise debt, what's your advice to people in terms of the mix between foreign currency and local currency?
Sure. Well, in general, the idea would be to have as much as possible their debt denominated in local currency. That would be the ideal thing. But certainly this is not the case, as you mentioned, in all of the countries, particularly in some ones that have very less developed domestic markets, which unfortunately is the case in most of the countries in Latin America. This is the case. What we are trying to do is, of course, it depends a lot on different markets, is to provide as much as possible local currency in our loans, whether it's because we raise funds in the local currency, which is not necessarily the most efficient way to do that, but using derivatives in order to convert foreign currency to local currency and provide loans in those currencies. It's also a challenge thing to do, but certainly it's evolved a lot in the last several years. I remember it was a long time ago when we did the first full delivery swap in local currency here in Colombia. It was 15 years ago or so, and now you have a very well-developed market in this country. So you need participants in the market, such as ourselves, and I know this is also the case for CABE in Central America, where we can facilitate, the inception of swap markets, derivative markets in general. So at the end, any other participants can benefit from that. So that's what we were trying to do in other smaller markets as well.
Thanks, Gabriel. Alper, I'm going to bring in an investor now once more, just briefly. I have it here that you are lead in PICTE's emerging local currency debt strategies. How do you look at the local currency debt markets in Latin America? Have you any comments on what you've heard? How do you advise people to proceed?
Of course. Thanks, Chris. Yes, my specialty is local currency debt, but I am responsible for both sides. And actually, in PICTE, we look at countries in a very kind of holistic way. So maybe in some of our competitors have a different approach, but we are specialized both in local and hard currency. So for us, it's important to see the both sides. In terms of local currency, the foreign ownership has dropped massively over the last 7 years. I think in 2015, it was like 25% owned by foreigners, but now it's 12.5%. And I can understand the reasons. And Alfredo mentioned the outflows from the asset managers or the funds like us. But this is turning, as in your opening remarks, we are more optimistic about that. So we welcome the issuance on the local side. It's good to hear from Jamaica that they are considering. Uruguay is already doing. Brazil, on the other hand, I would just say that let's not forget about the conventional Euro bonds as well. It's important for us to keep the liquidity. So if we continue to see issuance on all these curves, it's much better for us. Liquidity improves with issuance. So it is very good to hear about all these. And overall, I would like to add that we are quite optimistic about LATAM. China opening, you mentioned that. I think regarding China opening, we have only seen the domestic side, services related opening, not the investment side and commodity linkages. It remains to be seen, but it was one of the factors why we have been constructive of the region.
Well, I mean, people who love the region, as I do, and I spent 30 years, more than 30 years now, traveling around Latin America. I would love it to do well, and I'm glad that Pictet is optimistic, but we might at some point in the conversation, although we won't ask the sovereigns to comment, talk about the political moves in Latin America, which you can't have failed to notice a certain trend emerging. But anyway, well, if we have time at the end, we might come back to that, not strictly financial or economic topic. Umberto, CABE has, I believe, still in its planning, a project to create a sort of unified local market, taking in several of the countries in Central America. Obviously, a couple of the countries in Central America, a couple of your member countries, are already dollarized. But could you tell us if those plans are moving forward and what role you see for those in terms of financing the region? I guess it's mainly designed to be corporates rather than sovereigns, right?
That's correct, Chris. And it's a very important project. It's a regional project to have a regional clearinghouse for investment securities. This, of course, is looking to enhance the liquidity of the local paper to increase demand, cross-border demand, and to develop the markets. As Kaf mentioned, we're in an earlier stage of development. At CABE, we have to be market makers. De-dollarization schemes are not cheap. They're expensive in terms of cost, in terms of capital adequacy. Hence, this alternative measures, as the ones we are discussing right now, are very relevant in order to also increase the appetite offshore of this investment paper, right? And we're talking about corporates, financial institutions, public sector non-sovereign borrowers, which have an important participation in the domestic markets. But we still have some ways to go. This is a first step, of course, and we're looking forward to implementing this possibly within the next 12 to 14 months. Of course, any regional project is challenging, right? There's internal jurisdictions you have to address, put the countries in one table, and reach an agreement. That's always a challenge, as you might expect. But we're moving along, and we expect this to be executed within the next year, as I mentioned.
Okay, very good. I'm sure I've heard a different timetable at some time in the past. I must, never mind. If you don't mind, Victoria, I won't come to you on local currency because you mentioned it, and Alpera's also mentioned Uruguay. So I'll say coming back to you when we talk about sustainability linked. And on that note, I want to bring in Richard, who hasn't spoken yet. Richard, just moving up, this is not a workshop only about thematic bonds or labeled bonds, but it's clearly very important and a topic many people are interested in. I mean, to start off with perhaps a negative sounding question, I'm sure we'll get more positive. Do you sense there's any sign of a diminishing appetite for labeled bonds, let's call them thematic bonds, given that, you know, a lot of people have made optimistic noises and the markets look good, but given that the world is a pretty tricky place, inflation is by no means back in its bottle, rates are continuing to rise. Is there continued demand for labeled, or should people stick to their knitting?
That's a good question, and thank you for asking. And Chris, thank you, and thank you, John, for the opportunity to participate in this. I don't see any diminishing. Is the honest answer. We've had some conversations with a number of issues over the last few weeks about the reduction in volumes in 2022. But the fact of the matter is, across the whole of the bond market, there was a less of a slowdown on thematic bond issuance than there was in bond issuance in total. So in percentage terms, we've still seen a growth of market share, and I don't see any reason to expect that to change as we move into 2023.
Okay, and really quickly, Diane, because I know you have to leave quite soon. You've already told me that although the Republic is not going to be issuing, you are creating an environment for private sector actors in Jamaica to issue ESG bonds. Just a brief word on that, if you would.
Right. So the Jamaica Stock Exchange and the government are partnering for creating a framework and the platform, etc., for private institutions to issue green bonds, starting at least by next year. Okay. So what the process is far advanced. They do intend to have the regulatory and institutional framework in place by the end of this year, so that institutions may issue the green bonds across the stock exchanges platform. So currently, that's where we are in terms of issuing these bonds.
Thanks, Diane. And the only person who hasn't spoken yet is our other Jamaican, Sean. You're observing these developments that Diane has spoken on very closely, I'm sure, but give us a brief word on that. But also, I'd like you, if you would, just to, in a sense, mark Diane's homework. I mean, in the country has done pretty well, as I said earlier, against some hard years in the recent past. What do you see as Jamaica's sovereign borrowing profile in the medium term?
Let me give you the quick answer first. A positive trajectory. I'd be very surprised if Jamaica doesn't receive its well-deserved rating upgrade over the course of 2023. And I think, you know, it's difficult to mark the teacher, Chris, but you have to give this administration and the prior administration full marks for really, you know, carrying the flag on what has been just a textbook lesson on policy continuity. And really kudos and high marks to the finance team as well as the DMO team for continuing to push this along. Just to take a quick step back on just how I'm seeing, you know, the emerging market fundamental space right now, this is quite constructive. I think our other guests have highlighted somewhat on the fundamental side, China reopening, which is providing some potential tailwinds to the asset class. But what I don't think gets a lot of mention is the fact that China reopening also brings with it as well the historical supply of disinflation to the region or to the globe. Historically, China has been the supplier of disinflation to the market, especially the US market, its main trading partner. And I don't think that combined with, you know, a drawdown in inventories has really been factored into or fully priced into markets and rates expectations. So it's clearly, you know, there's concern given, you know, today's PPI release that peak or terminal rates may be higher than what the market is currently pricing in right now. at 5.25% or thereabouts. But what I think is yet to really display itself is the fact that we're going to have these tailwinds from the supply side unfolding, as well as hopefully knock on wood that we won't have any further energy shocks from Russia and the Crimea and Ukraine war that's going on that will continue to probably provide further inflationary shocks to the market. So fundamentals I think are great. Are improving. I think we've certainly been surprised by the resilience of emerging market economies over 22. And I think that resilience is going to continue to display itself into 2023. You look at primary balances improving by about 130 basis points. Fiscal balances, which it speaks into the slowdown in supply. Fiscal balances are also set to improve by about 50 basis points over the course of the year. So there's a less need for sovereigns to tap the markets, but where they do, I think they should absolutely look at the labeled bonds as a potential means to diversify their funding sources. As I think it goes hand in hand with what should be a well-defined policy, policy framework around sustainability. And that sustainability on the micro side in terms of whether it's water management strategies, renewable strategies in energy, those are the key mitigants to start to employ, that countries need to start to employ, that will reduce the country's impact from climate change or from a natural disaster.
John, if I may, Sean, I'm going to come back to you to interrogate the subject of label bonds in more detail when we've heard from a couple of issuers and potential issuers. But I'm not just asking you about Jamaica, so don't worry about that. Peter, let me turn back to you. Comment on what you've heard, on what you can discern in terms of people's planning for issuance this year, in terms of how they're relying on local currency markets. And then, just as a preview, I'm going to turn immediately to Victoria and go through the step up, step down structure, and then unpack that a little bit and how investors react to that or are reacting to it, and also, of course, ask the Brazilians what they might do next. So that's just a preview of what's coming in the next 10 minutes. But Peter, first to you, please.
Sure, Chris. I'll generalize and say that as issuers are planning for 2023, I think there are two key themes. I think the first theme is around timing, and those issuers that wanted to get into the market very early in the year and take advantage of what was an improved tone in January versus what we saw in Q4 2022. And then there's a separate group of issuers who remain in the camp that there will be a Fed pivot and there will be better days ahead for those issuers, and they continue to sort of plot in Q2, Q3, or potentially even pushing that transaction to the beginning of 2024 for those who can work along that timeline. And I think balancing and having those conversations with issuers against the backdrop we've already gotten in 2023, which is one that saw a tremendous rally to start the year and a more recent sell-off, has been a very interesting conversation. And then I think the second key theme that's been quite interesting this year is around the continued innovation of sustainably labeled finance. I think that Chile and Uruguay paved an incredible opportunity set for sovereigns to really dig in and think about the KPI linked structure. And I think that 2023 and beyond will continue to see an evolution of those instruments, and perhaps even a rethink of what those instruments are going to mean, what the opportunity set is for sovereigns, keeping in mind, of course, that the sustainability linked market started with the corporate space. And I think thinking about it being anchored in sort of those GHG emission targets and a couple related targets make a tremendous amount of sense for corporates. But as the world continues to evolve and as more sovereigns continue to issue, I think thinking about the social side of those structures is going to be a very interesting development in 2023 and beyond. Okay, good. Well, in fact, I'm going to ask Richard in a few moments as well about the next frontier. But first, let's turn back to the innovator, Victoria in Uruguay. Of course, Chile was the first sovereign. I mean, it's an interesting question, by the way, which if anybody wants to reflect on and give me an answer in a few minutes, why is this sustainability linked bond structure taken hold among Latin American sovereigns and not so far among, well, other EM, but also not among DM?
Anyway, to come back to that. But looking back on your deal, which was executed, of course, shortly after we had the last of these sessions, when Armand came along and told us about the framework and how it's been developed. I mean, your structure was groundbreaking in the sense that, well, you've gone for, in the jargon, step down rather than step up. Essentially, pay up if you don't achieve your targets on emissions and forestry, and save if you do, or save if you overachieve, and you're flat if you do. That's the structure, isn't it? That's how it works. So I'd be really interested to know why you decided to put that structure together. Obviously, you work with your banks and you sort of pre-marketed the idea with some investor accounts, I'm sure. But why did you decide to do that? And how does it look now in hindsight? Obviously, until the bond matures, we don't really know how it looks in hindsight, but how does it look now with a few months history?
Okay, thank you, Chris. Yes, we were very satisfied with the market response of this instrument. It was a work we have been working for more than a year with our book runner, but also within the group of interministerial group that was comprised of the Ministry of Finance, Environmental, the Energy, and the Agriculture. So, and also we have the support from 2 multilateral institutions. For us, this type of, why we issue this type of instrument? First, we want to connect our debt management strategy to our Paris Agreement goals. That was a very institutional framework that the country has signed, and we want to strengthen the commitment to our sustainable agenda. Second, we want to put the focus on outcomes, results, and also to deliver a specific material and visible climate performance objectives, and the action that you requires to fulfill them. For us, we address 2 complementary environmental public goods. One was mitigating global warming, and the other one was innovation, that is preserving a key carbon sink. And this was a concept that was resonate within many accounts. And is we define it as a proxy of the protection of biodiversity. That is one of the important heart to the climate change. First, this structure leads us to link our cost of capital to the environmental performance of the country, and we introduce these 2 novel two-way pricing mechanisms. It's important to highlight that when the step down is structured was a very hard work and a concept that was hard to introduce, but that the sovereign, to introduce this concept, the sovereign has, if the step down has to be, if we met, but also exceed our SPT that we are set our NDC. So for us, we have to give a high level, a high degree of ambitions to have this the step down of the Q. This, when we are talking to investors, we say that the notion that a country has potentially outperform its NDC targets has not to be as a diminish of the coupon. We think that if the country has outperformed its NDC target, this will lead to lower the credit risk and also to a higher bond market price. So we are seeing as a total return financial instrument. Indeed, we have there is a study of Bank of America that show that, for example, in the case of Uruguay, there are some technical factors that were behind the explanation of why our dollar bonds were tight if we compare to other peer countries. And one of the factors that they find is that the highest ESG rating that the country has weight in the ESG index, and this is attracting inflows. So this is show how important are the ESG factors in factoring the dollar price curve. And finally, we, from the point of view of a small country like Uruguay, this type of structure overcome the challenge to find a sufficient amount of projects that has to be earmarked for the format of for the size of our global issues.
Okay, and I'm gonna stick with you in a moment and play my role as agent provocateur in a second. Diane, I'm conscious that you're about to leave us. Are you leaving us? thank you very, very much for joining us. How I envy you, how I miss coming to Jamaica, Scotchie's rare nephew, listening to Uroy, Daddy Uroy, as the finance minister called him to me once many years ago. Great to have you here. Thanks very much.
Okay, thanks very much for having me, and thanks for meeting you all. And I hope we'll meet again sometime.
I hope so too.
Chris.
Okay.
Thanks a lot. Bye all.
So Victoria, just to kind of chuck a couple of bricks at this very cozy picture. One of the metrics has the denominator of GDP growth. So, I mean, clearly the arc of GDP growth is not an environmentally driven number. And it is, of course, a number that the government is well positioned to influence to some extent, but which is also dependent on a huge number of uncontrollable international factors and indeed private sector factors. The second thing is that one or two people have said that, you know, if you look at I think the forestry metric, baseline is something like 30 years ago.
No.
Isn't it back in the 90s?
No, for the KPI 1 was 19th, and for the KPI 2, the forestry was 2012. 2012,
okay. But people have suggested that these baselines are a little distant in the past. I mean, how do you respond to those obvious criticisms?
Okay, yes. First, for the first KPI, remember that when we set these KPIs was in 2017, where the economy we are having was growing, and the fundamental is that we are going to grow, but in a green way. We have to decouple the GDP from the GHG greenhouse emissions. This is why this is the main reason behind when we set the KPI for the first NDC. Right now, we were, for example, presenting for the second NDC KPI in absolute terms. But when the NDC was established in 2017, this was the measures that the people of the environmental feel more comfortable about to see the target. And regarding the second KPI, they were, you know, that for measuring this type of KPI, it's not something that you are going to measure annually, because you are not going to see important change annually. You have to measure in some, for example, the technicals, I guess, for example, 4 years that you have to measure. And the reality is that the last measure that we have when we were set the KPI was in 2012. Our idea was to focus and to be based on the NDC, because to fulfill the commitment from the country to the NDC, this was under an institutional arrangement where was a group of experts from all the country, and also was involved the private sector. So for us, the NDC was a very robust framework that we want to use for the bond.
Okay, thank you. So Richard, as promised, this is your field of expertise. You're where the tire touches the road at Societe Generale in this respect. But tell us, by all means, what you think the new frontiers are going to be. But also, I was reading something recently that said that the typical step-ups, or indeed step-downs, are in a much higher interest rate environment, are far less significant in terms of either an incentive for a certain behavior or another. So perhaps you might address that particular technical point, as well as giving us your general view about wither-labeled bonds.
Sure, thank you. I guess just a couple of things to say then. So firstly, on that question about the I guess the relative value of a penalty or of a bonus, and indeed we've heard those kinds of comments being made in the loan market for corporates as well. I think the first thing is to say as Victoria just mentioned, and as it sounds like they've seen some studies to support it. I think one needs to look at this from the standpoint of a total return on the investor side, and be thinking about it in those terms. I think the penalty and the bonus is something which is a necessary component of the instrument in order to have some teeth, if you like, and to hold an issuer accountable. But it's not necessarily the only thing. And our view, certainly with respect to sovereigns deploying a sustainability-linked instrument, is that there's a great deal more than just that financial penalty to consider when setting something like this up. If you're going to go about and set up a financial relationship between the targets that you've established in your NDC, or indeed targets that you may have established in other international fora, and express that to the financial markets, there's almost a more important reputational thing to consider as you look at what you're going to do in the future, how you're going to meet that, and how you're going to handle the conversations with the investors if it looks like you're not going to be meeting that. It's early days yet for the instrument as a whole. We're starting to see for this year and next year the very early set of corporates that issued sustainability-linked bonds, showing whether or not they've actually met their targets. We've had a little bit more information from the loan market because, of course, in the loan market, those targets are typically annualized. But in the bond market, we're only just starting to see what the performance will actually look like for these instruments and how that will be then interpreted by the investors in the market, both in terms of their existing issues that they're holding and in terms of their appetite for future issuance. So that would be my comments there. I don't know if you had a follow-on question on that.
Yeah, two follow-on questions actually. One is, what's your reading as to why, so far at least, sustainability-linked bonds are a Latin America only phenomenon? Why hasn't the Italian Treasury done one, or the Agence France Trésor, or so that's the first one. So I'll answer that one, and then I'll give you the second one.
Okay. Well, so on that question, I think we've seen a history here of leadership from Latin America on thematic bond issuance. I think some of the earliest social bonds, possibly the only social bonds that have been done on the use of proceeds side, it's come from Latin America as well. I think the second part of that answer is I think there is interest. We've seen, for example, Ghana did actually produce a social-based sustainability-linked framework. Actually, it's a combination framework. They just haven't issued against it yet, so they didn't get that star as being the initial borrower. So there is interest out there away from Latin America, I do think, but we do have a long history of innovation coming from Latin America. I think the second thing is, as we look forward, and you asked about I guess crystal balling into 2023 and beyond. I think that we, in the same way as we've seen social and the use of proceeds side from Latin America being an important area, I do think we're going to see some development on that in the sustainability linked space. It's a complex thing to put together, but it's also, I think it will bring rewards for those issuers who embark upon it. And I also think that Latin American issuers, sovereign issuers as a whole, have an opportunity in biodiversity, which is very clear. So I would like to think that we're going to see some issuance in that space as well, building on the good work that Uruguay have already done and building on perhaps other areas where biodiversity has been important, for example, with the detonation swaps that we've seen from some of the island economies.
Well, actually, you kind of answered most of my second question already, because I was going to ask you about social KPIs, and you mentioned Ghana. We did a workshop with African sovereigns on this last year. Was it Ghana that put together the KPI of hospital beds per head of population? One of the African countries was thinking of issuing on that basis.
Yes, I think it was. My recollection is there were two KPIs. One was on hospital beds, and one was an education-driven KPI.
Yeah. So KPI, social KPIs, where in fact a government potentially has much more ability to influence outcomes, particularly on things related to provision of social and healthcare and so forth. But the biodiversity theme was what I wanted to ask about as well. And you've already, are you in, just really quickly, or maybe I should ask Peter this on the other side of your house, because he's obviously the guy who's got to execute these ideas. Are you in active conversations at Société Générale with people about either social KPI linked bonds or biodiversity bonds within the region?
We have been, go ahead, Peter.
I would just say quickly, Chris, yes, there's been a tremendous amount of interest from the Latin American region. There have also been a number of other regions that have also expressed a significant amount of interest in both of these categories. I think the debate continues about what is most appropriate for each country. And in many cases, use of proceeds is more relevant or the right option versus KPI-linked securities. But I think that continues on a name-by-name basis. And that's not necessarily an indictment on either of the two instruments. Go ahead, Richard.
Yeah, I was going to say, I think there's a healthy amount of interest in both of these areas. I think that clearly any issuer who launches into this space, even when we've seen some initial forays already, is going to be innovating just because of the country-specific details that need to be addressed, and because we haven't really seen a lot of data points yet. But I think it's definitely a growth area, and it's I guess the way we see it, SocGen stepping back, is it's really that opportunity to communicate in the round about what a sovereign is trying to achieve. I think and we have similar discussions with some of the corporates on this who are active perhaps in biodiversity, but in a less visible way than they might be as they go about setting greenhouse gas targets. I think there's a window there to communicate about those things that either a sovereign is particularly strong on, to Victoria's point, where are the opportunities to outperform your NDC, for example, and also alongside that, we have to recognize that some sovereigns have areas of improvement where they can actually potentially use an instrument like this to demonstrate not only what are they doing in terms of their own expenditure, but also what kind of policy environment are they creating to encourage particular outcomes that either make up for a deficit or go beyond their internationally agreed targets.
Okay, thank you, Richard. We're going to gallop on past our formal closing time, of course, and I hope everybody out there will stay with us. There's a lot more material to cover, not all of which we will cover, but I want to make sure we do talk in some detail to Ottavio about his plans on thematic bonds. But just before we do that, I've got a couple of questions from the audience, actually. I can't actually tell who's asking the question as they're sort of fed through to me, but I want to ask Gabrielle. The questioner says, investments in local assets can be challenging. Can regional MDBs facilitate or improve access through local currency funding and swaps that finance local development? Well, you kind of mentioned that already, but just expand on that a little bit. What are you able to do in order to, I mean, it's not your job to help international investors, obviously, but in a sense, perhaps it is. How do you facilitate access to those markets?
Sure. Well, the most obvious way is for investors to invest in our bonds, I mean, taking our risk, and then we can on lend to the countries and the clients in the region. That would be the obvious way. The other one is, for example, participating in our, particularly in the private sector deals, in our deals, co-financing, or in the A and B structure, for example, where we can take, well, you know the structure, we can take the leading role, and we certainly participate part of the risk to investors outside the region. That's another way we can do that. And the one I mentioned before is by participating in the swap markets, derivative market in general, where we can do on our loans, convert those into local currencies as well. So there are many ways for the investor to participate in.
Okay, really quickly, two other questions that have come in. One is about central bank digital currencies. Is anybody interested in raising funds through those? Unless Octavius throws his hand up immediately, I'll move on from that. Anyway, it's a topic. Thank you very much for the question. Second one is somebody suggesting there might be a US default this summer. And how would that, what sort of impact would that have on anybody? I think we can guess it would have a fairly profound impact, but is anybody betting the farm that there's going to be a US default? No. Anyway, thanks for the question. Whoever you are out there, thank you very much for the question. So before I turn to Octavio and ask him what his learnings have been, not least from his own panel maybe, investors, Alfredo, isn't it really quite onerous from an investor's point of view to invest in any kind of KPI linked bond structure, in the sense that relatively more onerous at least than a green use of proceeds bond, where the thing kind of happens or it doesn't happen. You've got to do an awful lot of internal modeling, match the issues modeling. How difficult is that to you, and is it worth it?
Well, I think one of the big issues with SLBs is if you read the ICMA principles about SLBs, is the idea of the bonds were that the KPIs have to be a substantial departure from business as usual. So it has to be very ambitious on its sustainability performance targets. That's the idea when it was created. And it's quite difficult for us investors looking at many different names, many different industries, to really understand if this target is a substantial departure from business as usual or if it's not. That's why, even if I'm not a big fan particularly of SLBs, I really appreciate, what the sovereigns have been doing in terms of, Uruguay and also Chile, about linking the KPIs with the NDCs. Why? Because the NDCs, are very important for us, but we need to understand that they are very important for the governments as well, and it's not just wet paper. So NDCs are really a path to try to be aligned to 1.5. So if there is any chance, it would be by sticking to the NDCs. So for the investors, the NDCs are a big issue and are a big departure from business as usual. So we like that. For the corporates, well, I'm particularly much more comfortable with a use of proceeds approach, where we can do, this could be an auditor that looks into where the projects have been, the money has been spent. Regarding the last developments, and this is something I think Richard mentioned as well, there has been already one innovation about a local bond that really combined these two of having KPIs and having a use of proceeds approach. It was issued in Colombia, and we could see more than that. On this type of frameworks, I would say, yeah.
Okay, Alpa, do you have a thought on exactly the same question? I'm not sure Alfredo told me how onerous it was, or whether, anyway, is it onerous to monitor these things, model these things? Does that put you off getting involved?
No, actually, we are involved, and we know that it's early days, even though we have been involved, and we developed our process to be involved in ESG in general and SLBs like this. As long as the framework is strong and use of proceeds is clear, we will be interested in these bonds, and we will develop as the market develops. I think transparency is extremely important for us. And sometimes, if possible, third-party checks, third-party reports will be very good. And I think the market is moving to that direction. I think one area I would like to add is that I think the green transport and energy side has been the low-hanging fruit. Like as us, as PICTE and all of our clients, we want to see more on the social side. For the most of the emerging markets, one of the biggest issues we see is the productivity, and we think education is extremely important, especially for the places where badly affected during the COVID period. And if you look at the issuance, it's mostly, you know, on the energy side, which is good and of course very good, but we would love to see more on the social side. But yes, it's a bit more work, but we are investing on that to be able to involved going forward. PICTE is very committed to that.
Good, thank you. Sean, the art and the science of credit analysis are fairly well developed and have been around for several hundred years. Analysis of securities whose coupon is variable, conditional, linked to other things in the real world that are measurable, not always to an exact extent. That's something quite new. How do you view this with particular relation to Latin America, but just in your experience, your global experience generally?
Well, I think it has to be, well, I think first of all, I think these measures or these variables were implicit in, I think, everyone's framework. And I think over the years, what has been occurring is that these variables are now being formalized into a credit framework. And so where it has gone from, you know, off the blackboard, so to speak, to really into the meat and potatoes of credit analysis to determine what is the right price for a particular asset. So, and as you said, Chris, I think it continues to combine somewhat of an art and a science, as some of these variables are not, you know, are on a very delayed time lag. So it's difficult to make point in time estimates as to what they are. But I think what has been occurring over the past, you know, couple of years is that as data becomes more available and as the transparency improves, all these measures can be more easily integrated into an underwriting process, so that we as investors can make better informed decisions.
Okay, good, thank you. I decided we're going to go to Brazil as our sort of grand climax, if you like, but as Gabriel has to leave in a couple of minutes, I'm just going to ask this question of both Gabriela and Humberto. You're sort of, you know, full disclosure, I worked for Cabo for a couple of years, but, you know, you're sort of neck and neck, you know, you overlap in some areas. Obviously you have different groups of member countries. I seem to remember there's, I don't know, 4 or 5 in common, maybe 6 or 7, but your institutions is easy to kind of view in the same pile, if you like. You've both issued your biggest ever bond issuances this year. Gabriel managed 1.5 billion. Humberto did 1.25 billion. These are very, very sizable issues. And in both cases, they are talked about as you're both highly rated, one tiny bit higher than the other, but essentially the same. These are being talked about as your graduations into SSA status. Now, SSA status is not a clearly defined thing. You can't look it up anywhere. But give us your thoughts on where you are at the moment as an institution, as a player in the global capital markets, what's coming next, and how pleased were you with $1.5 billion? Gabriel.
Sure, no, thank you, Chris. No, for us, it makes, I'm sure this is the same case for Humberto Cabe. It makes sense for us to increase the size of our deals for many reasons, different reasons. One is, of course, is because the size of our funding plan has increased a lot in the recent years. Actually, just comparing last year, we had a total of $4 billion in bond issuances, despite the fact that the year was very difficult, as I mentioned before. And this year, we're expecting to raise around $5 to $6 billion. So it's increasing. And this is because, just to give you broad numbers, we've doubled the size of the bank in the last 10 years, and we expect to do the same, double the size of the bank in the next 8 to 10 years as well. This is based on new members. As you may have read in the press, we've incorporated many other shareholders throughout the region. We are also expanding into countries that had a smaller participation institutions, such as Chile, for example, which just recently reached the status of what we call full member country. So we expect to do more business in that country as well. So all of that combined, well, we also had last year the largest capital increase, $7 billion capital increase, which all of this combined, by the way, resulted in several agencies upgrading our ratings, and some others still have us with positive outlook. So all of that combined was the perfect timing for us to do this type of deals. Of course, the market helped for sure, but that certainly make sense. And the idea going forward this year is to do at least 1 or 2 more benchmark size deals. We need to do that, not necessarily in dollars, but also in euros and other currencies. So far this year, we've issued in Swiss francs and Turkish liras and many other currencies. So the idea is to continue expanding. And as you mentioned, Chris, continue to evolving into what is called, whatever that means, an SSA issuer.
Fantastic, thank you. I mean, 1,000 congratulations on the performance. So it's been an excellent trade. And years ago, you did a sterling issue. Might you do another one of those? I wanted to ask about diversity of currencies.
The answer is yes. Actually, we are currently thinking of doing that is a project for this year, doing a sterling deal. After I would say it's 20 years back we did the previous one.
Well, we're showing our age, my friend. Thanks very, very much for joining. If you have to leave us now, it's been great to have you here. So Humberto, we should say, of course, that CABE is obviously a much smaller institution than CAF. So your capital, your funding needs are proportionally that much smaller. Where have you gone? Oh, hang on. Have you disappeared? No, there you are. I beg your pardon. Sorry, I'm being foolish. As somebody logs out, of course, everybody moves around. It's like a sort of, becomes a maze. So, Humberto, your funding needs are somewhat smaller than CAF's. Nonetheless, the size of the deal you just got away, $1.25 billion. I mean, that's well over half your annual budgeted borrowing needs. So anyway, talk a little bit about that transaction, please. What graduating into SSA means, and also what diversity you might look at during the rest of this year, both in terms of themes or labels and currencies.
Yes, Chris. So as you mentioned, it was a very important transaction for the bank. I think it reflects our organic growth as an institution. We just implemented our 8th global capital increase from $5 billion to $10 billion. And we're looking at our 9th global capital increase, reflecting our role as a counter-cyclical fund provider to our member countries. When market closes, we have to be there. We saw double-digit yields on some sovereign bonds, hence the relevance for CABE and its access to the markets. You probably know the story of CABE very well. We've been issuing for the past 25 years, and we took our time to come to these global market. We decided to come to the market until we had a AA rating, which happened in 2019. Prior to that, we were very busy diversifying our funding base. It's actually one of our credit strengths. We've issued in 25 different currencies in 23 different markets. So in times of stress or volatility, as was the case during the fourth quarter of 2022, we're able to do issuances in Switzerland, in Mexico, and in Taiwan, just because we always have a market open for the CABE name. And now we've done our 3rd consecutive benchmark deal. in January of this year. We planned well ahead. We did intensive marketing efforts prior to the transaction, and the question we constantly get is how often are we going to come to the market, considering the liquidity of our paper? And the answer is we're planning to come every year. And we wanted to have a strong foothold with this transaction and increase the liquidity of this paper. At some point, the order book surpassed $2.5 billion. So we had demand from 133 different accounts from more than 33 countries, and almost 70% of the paper was purchased by SSA, sovereign supranationals and agencies. So I think that's certainly a credential for graduation, as you mentioned it.
Absolutely, it is, and I saw that over 50% of the paper went into European accounts. So that leads me to the obvious question: might you be doing a euro-denominated benchmark? And can I introduce you to a very good bank based in Paris who knows all about euros?
Sure. So yes, our funding plan for this year is about $2 billion. We're well ahead on our plan. We haven't made our euro debut in a public deal. We plan to do so in the near future. And the name of the game for Quebec is ESG, right? We are a natural generator of ESG pipeline. We have our blue bond framework, which was recently published in December of last year. And as you know, this $1.25 billion benchmark deal was a social bond. We did our first education bond also in Japan. So we are very creative at Quebec, and 100% of our issuances thus far this year have been ESG. We expect possibly 8 or 9 out of every 10 issuances we do will be ESG denominated. And of course, the European investors have a strong appetite for this kind of paper, which is becoming more and more scarce, as you might have seen.
Absolutely. Ottavio, as much flagged, I want to ask you about the time scale, the schedule, the kind of framework, the kind of structure you might adapt for Brazil's first global labeled bond. And of course, what Humberto just mentioned, which is the potential for a more diversified investor base, is obviously part of the argument for doing this kind of structure. And I'm sure it's part of your thinking. So tell us what your thinking is, please.
Sure. Thank you, Chris. Fundamentally, we are at the very end of our framework. We are now creating a group with the ministry's lines to guarantee that we can monitor all the indexes, all the indicators that we decide to follow. So we need to finish this internal agenda and finish the framework, and then test it with some investors, some banks that probably will be the ones that will do this first issuance for us. But I can anticipate that you are, let's say, we're leaning towards a sustainable bond, I mean, green plus social, and use of proceeds format. Why use of proceeds? Fundamentally, because we're thinking about a 5-year process. So the idea is to build a very liquid and well fit yield curve for the non-sovereign to go to this market and to use our yield curve, new yield curve, to issue their bonds. So our internal studies show that after the republic, after the sovereign, you see an increase of around 40% in the amount of companies issuing that kind of ESG bond, and something like 25% increase in the amount. So there is an important side effect after the issues of the sovereign. So for us to build this yield curve is very important, and SLB not necessarily help us in the creation of a very well-defined yield curve. We have more volatility in the SLB. Why sustainable? Fundamentally because it's the first year of a new government, so there are a lot of projects related to green, to environment, but the amount of money for that is not enough to complete, let's say, the whole glass. I mean, imagine $1 billion, $1.5 billion. So we do not have enough space in the budget for this kind of project that could fit $1.5 billion. So we need to complement with some social programs that are also very important. Not only the environment, but social programs are important in Brazil. In particular, the very famous Bolsa Família, there's a program to put people that are below poverty line to cross that poverty line, and then together with children in schools, this kind of very important process for us, for a country that has this problem of inequality. So the idea is to combine both, and we believe that both will be very well accepted by the community. But we will test before to check if it's in line with their intention. And of course, it needs to be also aligned with our needs. So fundamentally is that I can anticipate in this. But important to say that we are talking about a process, so it can happen, I don't know, at the very end of this first semester or the beginning of the second semester. But before that, probably we will see an ordinary issuance of an ordinary bond being issued in the market. The last one is in 2021, June 2021. So we are almost 2 years out of the market, so it's time to return.
So you would do a straight sovereign bond issue first, and as you decide the precise structure and format for your sustainability linked or your social bond, I mean, isn't there a possibility you might be doing more than one labeled bond? I mean, you've elected to go with sustainable to begin with, but clearly there would be demand and great interest in every possible label from a credit like Brazil. Are you planning, in fact, to do a series of these during the course of the year?
Yeah, during the course of, let's imagine a 2-year process, so better than a year. So do not fit necessarily in the budgetary year. So because the amount of debt, external debt outstanding is very small, so we can just buy dollars and pre-finance this. It's not this kind of discussion. It's a discussion about a very well qualified, well fit yield curve. So in this sense, one possibility not necessarily will be the one that will follow, but let's say sounds to be a good alternative to first issue a new 10 years bond. So create this kind of 10 or 30 years bond, I mean, a specific bond in one point of the yield curve, and then create this kind of liquidity to guarantee that the new ESG bond will have a good a reference to be issued firstly. This is fundamentally the idea, and there is a very clear window now, so maybe it's time to be used.
So, I mean, you're essentially sort of creating you're going to do a conventional bond to create your own benchmark for your thematic bond, and as you said before, your colleague Luis said to us the other day, part of the motivation for doing a label bond at all is to help establish international yield curves for other Brazilian issuers to issue similar kinds of paper. Is that correct?
Yeah, it's the same objective of our ordinary issuances. I mean, to create this kind of liquidity for medium-sized companies. Big companies, they do not need the Republic, but medium-sized companies, they need us a lot to create this kind of
and what about the other sort of state entities that issue from time to time? I'm thinking of BNDES, for example. Are you in collaboratory talks with them about entering this labeled market?
Not now. I mean, after the first issuance, probably we start an interesting process of bringing new actors to this kind of thing, but not in the very short term. We were, let's say, by ourselves.
Fine. Okay. I mean, Ottavio, it's great that you're unpacking all of this for us here at OMFIF and for our audience, because it clearly a much anticipated, much awaited transaction. We wish you all the very best of luck with it. But I'm going to close by asking a couple of other people what they think you should do. Peter, let me ask you first.
Sorry, Chris, you just circle back to me one second. Sorry.
Yeah, I beg your pardon. Just listening very closely to what Ottavio has been saying. Obviously, they've done some of the work to define how they're going to approach this market, and he's talking about a series and starting with a conventional bond and then looking on a 2-year time horizon to issue a number of labeled bonds of different types and structures. What do you think they should be doing? I mean, what's your advice to them? If they mandate you, maybe they have already, I don't know, it's private. But if they mandate you, what would you be suggesting they do?
Yeah, I think in general terms, Chris, my advice is always the same, and that is to do it the right way. And that means taking the right amount of time upfront to establish the right framework. That's true on the use of proceeds side. That's true on the KPI side. That's true about reporting. That's true about putting the full process in place before going to market and approaching investors. We've seen a number of issuers, both sovereign as well as corporates, go to market, pull the framework together, get a bond deal done without fully thinking through the process in its entirety. And I think that applies both to the framework, to the marketing, to the reporting side, but also in balancing the ESG labeled issuance with your vanilla curve and how that will work itself into your funding plans in the future and moving forward. Again, thinking about both how you'll balance ESG versus non-ESG, but also how you'll balance local currency issuance with external markets as well.
What's the most difficult part of executing a trade like this in what, after all, is still a very new market?
I think there's a large learning curve that comes with the first transaction, particularly for more innovative structures and for issuers who approach this format for the first time. I think so often we focus on the nuances of the specific structure, the specific KPI, and we forget the fact that when you approach this market and you speak with investors, the overarching ESG story and the longer term issuance strategy and plan, both as it relates to your funding strategy, but also as it relates to building towards a successful strategy, combining use of proceeds, KPI linked, et cetera, that full holistic story, I think, is incredibly important. And I think putting that fully in place before you make the first approach, I think is incredibly important.
Okay, I'm going to close with the two active portfolio managers in a second, but Richard, just an additional comment on that?
Yeah, I'd add to that on the use of proceeds side. It's what we have seen issuers in the past in the corporate space, for example, who haven't sat down as inaugural issues on the use of proceeds sides and really thought through how they're going to gather the information and have the information available for reporting purposes. So that's a critical piece to get into mind. I'm absolutely certain that that process is well underway, and that's what takes the time up front. But we think there's value in getting that done rather than being caught at the other side of having got the transaction in place and not really having the mechanism set up yet.
Okay, thank you. Alpa, what would you like? What would you, I guess you'd probably buy a Brazilian sovereign bond anyway in an emerging markets bond fund, but what would you like to see? What characteristics would you like to see in what Ottavio is going to issue? And it's not obviously just one bond, it's going to be a series of bonds. What are you looking for?
Sure. I think Peter summarized really well. I think taking the time to think about the framework, strong framework, is extremely important. For us, issuing across the curve is extremely important. So we have a liquid curve, not just one standalone issuance. And also these bonds will be framework, will be reference to some of the corporates as well, like you said, Chris. So yeah, these are the most important things for us. We want to see more across the curve, not just standalone issues.
Okay, Alfredo, key components for you in a Brazil issue or series of issues?
Yes, of course. I mean, it would be something that we would look at. I just want to point out that according to our approach to ESG, because we are very active, we have an ESG labeled fund in Latin America. but we score the issuers and not only the issue. So the use of proceeds is it's good to look at, and we will be very, very, very much in detail we're going to look at, but we're going to score the issuer first. So that means in E and S and G, and regarding controversies and everything, we need to really look at the issuer first. And this also is very much, it's also very important for corporates, I would say, a bit, maybe a bit more than sovereigns. But I think that this also explains a bit why the additional, the demand that the Uruguay bond had is that it scores well on ESG without any sort of labeling. So that's important, because when issuers in general, corporates and sovereigns, are thinking about this market, they need also to be ready in terms of showing the general approach to in terms of ESG, and not only the one that is embedded on the particular security.
Well, scoring the issuer first would have been a wonderful invitation for me to circle back to the political topic, which I threatened to do, but we haven't got the time, and B, we have some government officials here who obviously should not be asked about things of that nature. Nevertheless, there are very interesting private conversations to be had about what's going on in Latin America, not least, by no means least, Brazil, in terms of the politics and the structure. Thank you very much, everybody who's taken part. Otavio, I'm going to leave the last word from the stage, as it were, to you, and ask you, when we all meet, I should think pretty much all of us here will be there in Panama in the middle of March at the IDB meeting. Will you have announced your bond by then?
I think we'll have a much better perception about that, but not necessarily. No, maybe a little bit later. Okay.
Well, so we'll still be good. Excellent. The very, very best of luck with it, my friend. I mean, it's a huge undertaking, of course, highly complex, against the background of a new government in Brasilia. But no doubt there will be massive demand, as of course there has been for Uruguay's SLB and Chile's and everybody else's paper. That's the great thing about these markets, particularly as we enter the middle of the first quarter of 2023. We all expected it to be harder to get transactions away than obviously it has been. Let's hope that long may that continue. Thank you very much, everybody, for joining us from all over, from Brazil, from Uruguay, from Tegucigalpa, New York. Until the next time, thank you all very, very much indeed. Bye-bye.